Hi, everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Due to a travel restriction on Friday, I am actually doing this recording after the market closes on Thursday, so we could have one more day of interesting information before the market closes. But as we do each and every week, we show you the stocks on the screen that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, so let's take a look at where the market is today. And where we finished on Thursday. Same thing. We're moving up in this potential ending diagonal. You can see that we still have the wave 3 labeled in green, means it's still the active wave. I do want to show you, I've took all the other zigzags off the screen just because they were getting to be so many. We can take a look at where we are here. And look, we moved exactly to a 50% corrective move following the big election move to the upside. And if we look for 100% extension, that brings us right into that area that we were talking about weeks ago, around the 610 area. And if it kind of stays in this range here as we move towards the end of the year, which is a seasonally bullish time of the year, we could complete that zigzag at 100%, which is a 50% B wave correction. That's where you would expect to go. And again, that could be a wave 5 and the ending diagonal. So some of you have said, why is it an ending diagonal? Why couldn't it be a beginning diagonal? It usually is an ending diagonal in a wave 5. You're correct there. And the Elliott wave algorithm did relabel this to a 3, but it stays within the same symmetry. And I really like the looks of that. It's from a technical standpoint. I know not everybody cares about it. I do, though, that the patterns become symmetrical. And this just seems to be playing out exactly as we've drawn it. And if you've been watching over the past number of weeks, the way these zigzags have been moving up in this pennant formation, you can't argue with that, whether or not you think it's an ending or a beginning diagonal. It's still been in a pennant pattern, and we are consolidating a little bit more. We had a little bit of correction. It's not labeled as a wave 4 yet, but it likely could be. And there's something I wanted to bring up. A lot of you have talked about this, and you've made really nice comments on how well we've done with some of the forecasts in the past and the performance that you talk about. And I did want to share with you an opportunity to see the actual performance that we've generated at ewotrader.com. I say we because there's another trader, myself, Jeff Beamer. And we have a strategy called the Platinum strategy, which is a combination of directional strategies, non-directional strategies, and earnings-based strategies. So they're all wrapped into one. In a platinum portfolio. That's what we've been giving away, that I've been talking about this level 3 giveaway. This is an addition to that where we add in a couple of other strategies. And since we started over 22 months ago, we haven't had a losing month. So since inception, it's not at a losing month. And you can see there on the far right, November is shaping up to be potentially a record month from the standpoint. So if you'd like to learn more about what it is we do and how we do it, I invite you to look at the link at the bottom of that slide, sign up for it. It's free. And we'll be talking about all this on Monday. So you'll get some detail on the intricacies of the strategies and the different approaches that both Jeff and I have towards creating a pretty impressive, I have to admit, track record. So I hope to see you there on Monday night. All right. So back to the markets. We'll see what happens with this move to the upside here in the C wave extension. And then I wanted to go directly from this to the bond market. So let's jump exactly to TLT, because I've been noticing and mentioning that the bond market is not cooperating with the equities market as far as rates being higher. And here we are with this move down here with rates. And notice what happened today. We did have the jobless claims number that came out today, and jobless claims were pretty good. They're going down. So the jobs market has had a rebound. Remember, that was the Fed's thing. They wanted to see a cooling in the jobs market. We had a little bit, a brief cooling, and now we're moving back up. And in fact, the continuing claims number, which is what a lot of people look at, broke below the 2 handle for the first time in a while. So the jobs market is still reasonably strong. Does that mean that the Fed may not cut in December? They're saying it's not a guaranteed. At one point in time, the December cut was almost 100% priced in the Fed fund futures. It's not anymore. And now there's some wondering, will they actually cut the other 25 basis points in September? There's still a narrative that they will cut 25 and then rest. but we don't know for sure we're going to get that 25 basis point cut. And if we go back and look at the chart of TLT, you can see that I don't think the bond market is too sure either, because we're staying down here now. That Elliott wave pattern is disqualified, as we talked about last week, but we're hanging around this 160 or 100% extension, wondering if we're going to go down to the 161.8% extension. If we do, that means a big move to the upside in rates. I don't think the economic data has warranted that just yet. We'd have to see some more higher inflationary data to where the Fed is just done for sure. But that is a possibility. So for now, status quo on the bond market, but concern about whether or not we're actually going to have this December rate cut or not. We're moving into a seasonally bullish time of the year. So let's take a look at the VIX, and then we'll look at the dollar after that as well. So looking at the VIX, we're kind of staying in this range here between 15 and the 22 and a half that we'd gotten up to. And we broke below it. Looked like maybe we're going to go down and try that 12 and a half level. We didn't. We turned and came back to the upside. But now we're sitting here right down around the 15 level. Some of you mentioned in your comments that the VIX always fills its gap. Remember, we talk about gap filling all the time. We have the AI data. This is 94% of gaps get filled. And we made this bounce up. So we haven't quite filled the gap. So does that mean there could be a little bit more to the downside? I thought today's price action was pretty interesting in the market in general. But for now, as long as we stay above that support level at 15, you do have to wonder if there will be a spike back to the upside, at least to fill this gap, if not maybe to go up and test 22 and a half. But then we're getting to this. There's a old expression, never short a dull market. And once we get past the Thanksgiving holiday, a lot of traders take that month off. Like their month ends after the Thanksgiving holiday. They don't even come back to work until after the New Year's holiday. And because of that, volumes go down, they dry up, and that's where the dull market comes from. It's not very active, and typically things tend to drift to the upside during that time frame. We'll see if that plays out this time as well. Now looking at the dollar, as I mentioned, at least the dollar is consolidating a bit. As you know, I'm concerned about the fact that the dollar has run so far so fast. Also wondering if that is indicating, along with the bond market, some recessionary things. It's not showing up. It hasn't really happened yet. The housing market regenerated. It had good numbers today as well. So it seems like we're getting another move to the upside there. But until the yields break, I'm still going to be concerned about it. I'm still going to be cautious. That's what I've learned about the bond market over the years. It's rarely wrong. And with it showing stubbornly high rates, I'm going to stay a little bit concerned and cautious about the equities market as well, even as we continue up in that narrowing pennant pattern, potentially ending diagonal as we move. Let's look at some of the other U.S. markets here. The DIA, nice bounce back today. We moved up, came back down, bounced off the 30-day moving average. That's not a big support resistance moving average for me. It's on there because I like the 1030 crosses to be illustrated on the chart. The blue line here, the royal blue line, is the 50-day moving average. As you know, that's more of the intermediate term indicator that most people look at for the trends. 10-day is the shorter term. So we came down, we broke below it a little bit and bounced back to the upside. The only question here is we came back down. We were clearly going to come back from that vertical move following the election. You've heard me say it a million times. No security in any time frame gets too far away from the 10-day moving average, at least not for long. You can stay overbought or oversold for short periods of time, but you're going to come back to that 10-day moving average, whether or not you go sideways and let it catch up or it retraces back towards it. And that's whether or not, excuse me, you're to the upside or the downside. So for here, back to the 10-day moving average, nice bounce on the DIA today. We'll look at the Qs and a little more struggle there, which you would expect. I mentioned this and I've owned it, that I said I'd be surprised if that Zig-Zag pattern moved and completed, but that's the power of the zigzags. That's why I love that pattern so much. I love directional zigzags, my favorite pattern to trade, especially within a wave three. It hit it. We came back down a little bit post-election here, but back above the 10-day moving average today. But I do think the Qs will struggle a little bit more than perhaps the other indices with the higher rates. Speaking of rates, the IWM is one that has been moving with rates, but a nice move back to the upside here today. We got awfully close to that 225 level. We didn't quite hit it, said that I thought this would be the leader. This would be the one that would lead the retracement back down from these overbought conditions that we had post-election night, and perhaps test the 225. We didn't quite touch it, but we got awfully close. With this big bounce today, now we'll look to see if we get follow through on Friday and can close higher again. If so, then maybe we don't actually touch the 225 level, and that was all the tests that we get. But it'll be a key whether or not we get a follow through day or confirmation day tomorrow in the IWM. Let's take a quick look at the metals. If we look at gold, had a little bit of a bounce back. We thought we were a little oversold. We mentioned that last week. They were getting just a little bit oversold, and maybe we can have a bounce back. This bounce has gone a little bit further than I thought it might, especially with rates being higher and the concern about inflation through tariffs, et cetera, importing inflation, if you will. But we're back above the 50-day moving average, back above the 10-day moving average. Now, if we can get that 10-day to cross above the 30, get that bullish 1030 cross, maybe we have even more in store for the GLD. But for now, I think we have to be cautious that this still could be setting up for a downward zigzag here on. Notice that we're right at the 50% retracement level today, potentially a downward zigzag. We don't know yet. If I put the Elliott wave pattern back on, you can see that the wave 5 finished here. We moved down. So that all sets up nicely that maybe this has just been a little bit of an oversold bounce in the metals. It's hard to imagine that gold and silver are going to go move back to the upside if we are concerned about importing inflation. And we take a look at SLV as well. Also just hanging around that wave 4 right at the 61.8. I said this would be an area because that's the strongest fib level, in my opinion, where we may have a little bit of an issue here as far as any potential move lower. We did complete that C wave on the zigzag. When you complete a C wave, you come back and retrace the B. We did. We formed the wave 4. All this was an area that we may bounce. But note that we are not getting the same kind of bounce in SLV that we did in GLD. Is it lagging? I think you could actually look at SLV. I think that's tying more into the fact that the Qs are a little bit calmer than the rest of the markets, and SLV is following along. But maybe there's a little catch-up trade here that you could do in SLV and catch things back to the upside. Taking a look at oil, as I mentioned, I have no idea what's going to go on with oil. We do have this symmetrical triangle, which does seem like we're going to get a breakout. They almost always do break out of these triangles. And then we have resistance up here just above 77.5. We have support down here at 67.5. So we break out. Can we break one of those support resistance levels depending on which way we go? So a breakout is likely in oil, but how far does it go? I'm not sure it goes that far. I think that maybe we break from this triangle and then we stay in this larger trading range following the breakout. So we'll just have to watch it. Maybe there's a quick trade there once the breakout occurs. But for now, I think you just have to wait and see where things go. All right, let's take a look at the cryptos. Holy cow, that's where the action's been. If you've been following along, and you guys made nice comments about having Brandon in here in the recording before to talk about the crypto world, and he has been spot on. And he joins us on the Hub Financial channel. If you haven't gone to do that, go over to the Hub Financial channel here on YouTube. Subscribe there. We do a crypto show each and every week with Brandon, and you can see more information about where we think things are going to go in the crypto world there. So you got a little taste of it here, but go to the Hub Financial channel here on YouTube, register, subscribe there, and you'll be notified when one of those recordings is posted. So here's Bitcoin moving to the upside really nicely. Look how close we've gotten to 100,000. Getting up this high, this is in the tractor beam effect. You know, my Star Trek analogy, it's a nod to my dad, who was a big Star Trek fan. You get towards these big round numbers, and it just acts like a tractor beam. It draws them to it. There's no way we're not going to go up and hit 100,000 in Bitcoin being this close to it, and we got awfully close to it today. And we'll see if we don't touch that either tomorrow or over the weekend. And Ethereum got its act together today. Look at that in a big way, breaking out of that little triangle that we had. Now we want to see if Ethereum can get above 3,500. Taking a look at Solana. Nice move to the upside today on Solana as well, getting above 250 on that. Also breaking out of its nice little triangle. You can see all these triangle moves working extremely well. And then I wanted to talk to you about Mara, MARA, which actually we gave out as our case study consideration this week in TradeFinder. And TradeFinder is an event that we do every single week, Tuesday at 1 p.m. Eastern Time. So it's during market hours. You can see the link on your screen. Please register for it if you haven't already. It's free. We talk the markets. We look for trade ideas, and we have a live Q&A. We have a fantastic community, and people have actually referenced the community. You guys chat to yourselves. You ask great questions. It's just really a fun event during market hours on Tuesday. And we also have a case study consideration when we look for trade ideas. And this week it was on Mara, expecting it to go up to 25. Well, in 2 days, it did that. It went right to 25. So all you have to do is go back and look at the recording in last week's TradeFinder. You can see that that's what we called out. And it went there. So worked out well. So love to have you sign up and join us for TradeFinder this coming week. Now let's take a look at some other of the trade ideas that you guys ask about in last week's recording. As I mentioned before, I look at every single one of your comments. I answer as many as I can, time and travel permitted. Don't always get to all of them, but I try to, but I definitely read them all. And there was one gentleman that posted 3 different times that he wanted to look at SMLR. So, hey, if you're going to do that, then we'll give it to you. And by the way, another thing I wanted to mention real quick is every single month this year, we are giving away one of our level 3 subscriptions. It includes our time strategy, which is a sideways income-based strategy, just designed to find strategies that can bring in monthly income. So it's not like a big directional trade. But we do have the volatility strategy, which is the triangle breakouts. And you've seen all the triangles that we have already. So we look for those in the volatility strategy. And then our AI-based impulse strategy, which is a directional based strategy. It's those zigzags within a wave 3. You combine them all, that's called level 3. So we're giving away one of those free every month this year. And the only thing you have to do to register for that giveaway is worth thousands of dollars. Is just simply post a comment underneath this video. And then, as I mentioned earlier, on Monday night, we're going to talk about our platinum service, which adds in a couple other strategies. So if you want to see how we've been able to go 22 straight months without a losing month, again, join us for that. So let's take a look at SMLR. And you nailed it. The person that asked about it, big move up yesterday, follow through today, massive breakout. But now you know what I'm going to say. Now we're a little bit overbought. So you can see the high of the day was up here right after the open, and we're trading down here at the close on Thursday. A little bit overbought from the 10-day moving average, so maybe we need to rest and consolidate this a bit. But kudos to you. Good call on this with that vertical move. But I just think maybe a little too far, too fast, and we need to consolidate just a bit. But I'd have to do some more research here to see what caused this big breakout move and if it's likely to continue. But once again, great job on selecting that one. And we also have to look at NVDA. You know, we got to look at that. With the fact that they had their earnings report, and it was all over the map. After hours yesterday, they were down, and then the futures were down this morning. Then the futures turned around, and they went up. And so pre-market, it was lower, then it was higher. And then you can see that we just kind of, after all that, you can see this big bar from the low to the high on the day. And then after all that, kind of just right where we started from yesterday's close. So the numbers were good. It was the guidance that was a little bit under what the market was expecting, but a great earnings report. Can't deny that. But they were looking for a little bit more. I can remember the days back in the end of the 90s when the market seemed to go up every day. They would get into these whisper numbers, like you would have these expectations based on the analysts' numbers, but then there would be these whisper numbers, like everything is beating earnings all the time. So they would look for even a higher number. And I think that NVIDIA kind of got caught up in that. They were looking for something extraordinary from the guidance, and they didn't get that. So we didn't get the big rip move higher, but so far holding 140, that's the key level that you want to watch on NVIDIA. I think you stay long as we're above 140. If we were to break below 140, then I think maybe you either take profits or perhaps pause. I don't know that NVIDIA is going to be a short at any time soon, but I think those are things that you would look for along those lines. And then if we take a look at AMD, I'll ask about that as well. We come down. We had this C-wave extension right at 100%. No five-wave pattern here in AMD. We broke below the 100% extension, which means that we're likely to go down to the 161.8. We bounced up. We got a little bit below last week or early in the week. The 10-day moving average, we've come back up. We've touched that. There's that rule about getting away from the 10-day moving average. So we've hit it on the high the past 2 days. But it seems like we do want to drift down to that 161.8% level on AMD. If you're wanting to go long, I just don't see how you go long AMD. Even if it gets above the 140 level and the 10-day moving average, I think you want it back above the 50-day moving average to go long again. There's too much separation here between the 10 and the 50-day moving average. So it feels like it wants to drift a little bit lower to that 161.8% C-wave extension. But if we could turn and go back up, watch it. If we can get above the 50-day moving average, then I think, yeah, perhaps that's a potential long. And then we'll finish things up this week with Palantir. You guys asked about that, and gosh, that's been in the news following their earnings report. We're going through a nice consolidation here, very extended on this, pardon me, zigzag pattern. You can see that we had the 32% correction, so you go, or B-wave correction, so you go to a 61.8% extension. If you go to the further extended level, you go to 100%, which we did, and we've blown above not only that, but the 161.8% extension. So it looks like we're in a new impulsive move here. I would say that this number from right here, the 100% level, up to this level has been the impulse for a wave. And we'll see where the corrective move comes from or when it does. We're getting a little bit of some sideways movement here, a little small triangle like we showed you earlier on a couple other charts. So nice consolidation here on Palantir following that big move. Perhaps a little bit of a downward break here would be constructive for completion of a zigzag to the upside. But for now, it seems like we need to do some backing and filling here following this big run up in Palantir. But yeah, it's been in the news, great earnings report, et cetera. Thanks so much for watching. Appreciate it very much. Look forward to talking again soon. Have a great weekend, everybody. Take care. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.